In today's video, we are discussing absolutely everything you need to know about both the short-term and the macro charts, as well as the broader cryptocurrency market. We will also be going over interest rates in an extreme amount of detail, discussing absolutely everything from expectations to implications, and of course, exactly how the monetary policy impacts the risk asset market. By the end of today's video, you'll be well equipped and informed so you can not only make the best decisions possible, but have the relevant information required to do so. Let's go ahead and jump on in. Okay, legends, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely fantastic day. In today's video, we are discussing the recent breakdown of the major symmetrical triangle formation, the possibility of a continuation lower, and exactly what needs to occur for the buyers to step back in and push the price up. We are also taking a look at the upcoming economic news and the profound impact this will have on the cryptocurrency space. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, join us on VIP. You can join the VIP channel by clicking the pinned comment in the free channel and contacting me, or click the next two links. The first one being a trading track record link. This will have over 50 months of trading track record data spanning back to February 2021 since the channel has been operating. And of course, the second link being a 10+ minute video showing you inside the channel itself. We've been operating for over 50 months. We have over 700 members, and you'll also get access to a group chat, including access to the main channel. Check it out, guys. Watch the video for more information. Let's jump on in. So taking a look at the price action, as we discussed in yesterday's video, we told you that a breakdown of this symmetrical triangle formation would result in a correction to at least the 200 EMA, which is this blue line on the 4-hour chart. In fact, we saw the price action drop temporarily below the 200 EMA, dropping down to a price of 97,600. As we can see, since then, we have seen a nice reversal on the short term for Bitcoin, pushing up to retest these prior highs. If we move over to the 5-minute chart, you can see we are coming up to retest the prior high points we made just around 12 hours ago, which is a critical level of resistance at around that 102.2 level, which we are currently breaking through as we speak. However, on that 4-hour chart, we can still see momentum is negative. We can see the RSI trend line, a representation of the momentum since that bearish divergence developed. We've had a downtrend. We can see the RSI is still sitting under the trend line. This is a level we are going to need to break through to be confident that the buyers are back in control. And if we are able to see that, it is possible the price action will continue higher. We'll come back and discuss this in much more detail in just a moment. Looking at the market data, 24-hour volume and liquidations are relatively high. Liquidations are no joke right now, sitting at 777 million, up 110% over the last 24 hours, with 613 million long liquidations. Again, a massive sell-off for both Bitcoin breaking down, and if we look at the total altcoin market cap, we also saw a very aggressive correction on the total altcoin market as we as well broke below that major symmetrical triangle formation we showed you just 2 days ago. So we saw a massive correction right to our target. If you're watching our video, we said we were looking for a move to around 980 billion, potentially lower, and we saw that correction. So anyone who paid attention was able to avoid this massive drawdown, and as you can see, it was a massive drawdown as we nearly saw $1 billion in liquidations in a 24-hour period. With liquidations increasing, volume will of course increase, up 151%, 336 billion. A lot of people asking me, Whale, how are you playing the market right now to protect yourselves against this volatility moving into interest rates? As I've said many times, and I'll say it again, I have been sidelined from the market. I've been sitting solely in cash ever since the 14th to 15th of December. That is when, again, we saw Jerome Powell come out and say that we were expecting only 2 interest rate reductions in 2025. And since that point, we have seen uncertainty develop in the markets and uncertainty in the price action, with essentially this weekly range developing with massive liquidity grabs to the top and bottom side. So the answer is, I am personally sidelined. I've been in cash for nearly a little bit over a month and a half. That means I am simply scalp trading and situationally swing trading altcoins on the side, but I'm all out of the market in spot positions. I will look to re-enter when I deem the monetary policy is moving in favor of macro continuations toward the upside. That's a topic we'll be talking about in today's video. Moving over to the DXY has rejected and seen a correction. We've seen a pullback back to our range high. Now, this is a major level of support. When you see how the market, both the S&P 500 a second and the DXY, is kind of setting itself up for a major move, which is completely and utterly dependent on those upcoming interest rates, which we'll also discuss in a second. But to keep it simple from a technical perspective, from a structural perspective, essentially, while we remain above this horizontal level, the possibility for reversals are in play. If we drop below this level, we are watching for corrections to 105, this major level of sell-side liquidity. A loss of 105 would be a steeper correction, potentially all the way down to the 200 moving average on this chart. So we do have the potential for a massive sell-off here for the DXY. If that does occur, risk assets will massively rally, right? Risk assets will move inversely to the DXY on a general basis. Not always, but on a general basis. So what could really push the DXY down? Well, if the Federal Reserve come out and say, well, inflation is moving better than expected towards their targets, or they're looking to revise their prior statement that we're only doing 2 interest rate cuts to potentially more than 2, any sort of speech that alludes to a potential future where we see more than 2 interest rate reductions will be bullish and will likely result in the dollar falling and assets rising. So that's kind of what we're watching for. That's the narrative we're watching to see how that develops in the meeting, which we'll discuss in a second. We'll come back. S&P 500, as we said, we saw one of the 2 things we needed. Number 1 was a weekly breakout. We had that. We had a massive tick. Number 2, we had the RSI. We did not see the RSI break above, and we've said in yesterday's video that if we do not see both of those, the possibility for this move to result in deviation and be a fake out is very high. We saw a fake out and deviation for massive sell-off of S&P 500. So again, we come back to that initial statement. We need to see the weekly break above the high and the RSI break upwards. If both of those things occur, we will then turn bullish again on the S&P 500. Now let's get into the analysis for Bitcoin and the broader market. So we have a lot to talk about, guys. Quickly, sign up to BitGet, BitUnix, or BingX. Links down below. 15 to 45% discount on all your trading fees. Massive, massive incentives there for you as a trader. Support yourself in your trading journey and support me making this content. Sign up with the links. We'll play a quick ad and we'll jump into it. Let's go. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump into it. And once again, we are going to yap on about the interest rates because it is very important. I've said it every video and we're going to say it until we get this event past us, but it is of absolute profound importance in terms of where the risk asset market is going to go in macro. Policy stipulates demand, and we should be watching how that monetary policy is developing, and more so the perception of how that will develop in future periods as the market is forward seeing. So let's take a look. If we look at Bitcoin for an example, we take a look at that daily chart, we mark out some points of significance. Point number one was going to be the top at that 108k area. What happened? We saw an announcement that we were going from 5 to 2 interest rate reductions. What does that mean? That means the perceived systematic risk in the market is increasing as the market then tries to adjust for a future period where there is lower probabilities of again interest rate reductions, which we know as a consequence results in higher inflation and again higher asset prices. So as a consequence of the market knowing what long-term effects this may have, the market starts to de-risk moving into this narrative. We saw a massive sell-off and correction until we saw this massive liquidity grab on the flush around the 14th of January. What happened on that date? We saw inflation CPI data come out. In fact, we saw CPI data come out better than expected. We saw around about 0.1% lower than forecasts, which is indicating inflation is moving towards the targets, what the Federal Reserve has set, potentially faster than expected. Now, this assumption that the inflation is moving better than expected adds a notion where if the Federal Reserve has their next meeting and they've identified the prior inflation was better, they may be more likely to revise their prior statement of 5 to 2 interest rate reductions, and thus the market rallies in anticipation of that. You can see already how this is developing, how the price action moves in anticipation of events. So we saw the market rally back toward the upside, moving into FOMC, which is where we are sitting now. We are sitting in a situation of still higher time frame uncertainty. If we look at the high time frame chart, we are still sitting in this weekly range, right? The weekly range from this high here to this low here hasn't changed. We are chopping between, but we can see how the price action has been directly moving as a consequence to the change in perceived systematic risk from these news events we're getting, some being leading indicators and some even being lagging indicators. So looking at this flow chart here, we can see very clearly how interest rates, or should I say the trajectory of interest rates, because again, interest rates are lagging to inflation, the trajectory of the interest rates in a future period formulate the basis of what we constitute as perceived systematic risk, which in layman's terms is what do people in the market perceive the risk to be at a future date based on potentially upcoming or current monetary policy. That's essentially what it is. So we can utilize this information to then extrapolate the overall trajectory of interest rates to then get an understanding of how the market is not only going to perceive the news, but react to it when it does come out. And that is why I'm saying this interest rate release is so significant, because we have gone from a period where we've had expected declining interest rates to now the Federal Reserve saying, well, we're only going to have 2, which is now going to be a plateau, and these plateaus cause uncertainty. Anytime there is uncertainty, we see Bitcoin dominance rise as money flows out of more speculative assets, goes into safer opportunities such as Bitcoin. We see the price action for Bitcoin and the S&P 500 chop aggressively sideways, which is what we are seeing, but slightly upwards as there is an overall macro uptrend, and we haven't seen these range breaks. So again, what happens in a 2 or 3 days time when we get that meeting is going to play a massive role. The positive scenarios are going to be, one, we see interest rate reduction. That would be incredibly bullish, but very unlikely. It's more likely we'll see a pause. And number 2 is that Federal Reserve Jerome Powell alludes to any sort of environment, with any sort of speech that either says that inflation is moving quicker and better towards their targets. They are going to directly say that interest rates will come down more than twice, or they allude to, whether it be indirectly, that interest rates will come down more than the expected 2 times in 2025. Any of those variations on words will likely result in the market moving upwards. If we'll see the opposite, which is going to be the bearish sign, meaning we are only going to see 2 interest rate reductions, or we might even see less, or inflation isn't moving as expected, the job market is still very bad, and all these indicators are looking at to gauge inflation is still very, very poor, when the markets will correct as the uncertainty, the waiting game will be over. We'll have that clarity for the market to then move up or to move down. So let's jump into now the technicals and the structurals, because out of everything we're discussing, that really is the most important information. Our economic monetary policy stipulates demand of assets. And I can go on for hours about this. Again, I have a background in economics. We can talk for hours. This is just scratching the surface level, but it really is the most important stuff because people get it wrong all the time. They think the economy is a representation of the markets, but it's just simply not the case. The market is future seeing. The market moves based on perception. It moves on perceived systematic risk, not the actual risk in the current time. But let's take a look at the asset markets here. Let's take a look at Bitcoin on the weekly. We've said already this weekly range will likely continue until we get some certainty surrounding the monetary policy. If we see a weekly breakout of this high, we are expecting the measured move of this weekly horizontal range to play out and take us upwards to 115,000, okay? If we see a weekly breakdown of our low, we expect the same measured move to play out and take us sub 86,000. Now, sub $86,000 is a very important level, as a breakdown sub $86,000 results in the price action entering what we would call a low historical resistance range. You can see the low historical resistance range right over here. Again, according to our horizontal visible range volume profile, we can see that according to this indicator, on a horizontal basis, the volume requirements or the historical trading volume at any of these particular horizontal prices is exceptionally low in comparison to up here or here. So we have what we call a low historical resistance range. Now, if we enter a low historical resistance range from a point of bearish momentum, we have, what do we have? We have a period where the bearish volatility will increase as the volume requirements for the price to move lower in a low volume historical resistance range is decreased. So we see a massive correction in price action, okay? Volume itself is not a great indicator. We have to take it in context to the requirements of the volume at any particular horizontal price. It doesn't matter if the volume is massively high, if there's an equal amount of massive historical resistance or current resistance. It matters what the resistance, or should I say the volume requirements are for the price to exceed those resistance levels or break below those resistance support levels at any particular time. That is why volume itself is a bad indicator. We have to contextualize how much volume is actually required, and we do that by looking at our visible range volume profile and the exact levels of which we need to break and the reaction of which those levels actually break. So on the bullish case scenario, we can say exactly the same thing toward the upside. When we break through the range high, we enter a low historical resistance range. This is essentially price discovery. We do not have historical resistance in this range, so the price will enter a bullish volatility move toward the upside. So in either way we look at it, whether it be a range low breakdown or a range high breakdown up, we are going to see an explosive move for Bitcoin. And that is why this range is of absolute significance, why we're going on about it so much, because the implications of this consolidation will be profound on the macro. It will determine if we are going to see a massive rally to 115, 116, or potentially mark the top of this move, mark the top of this cycle. Again, if we break below 86,000, not only are we losing a major level of support, which could crash us to 72,000, but we are losing the total the total market cap 2021 high. If we lose the total market cap 2021 high, what do we see? We see a similar scenario to what we saw in 2021, which is a range high deviation before continuation down. We could see exactly that same thing occur if we get that pattern play out, if we see 86K lost. Not only do we see the total market cap breakdown, which will bring altcoins down significantly, we will also see a loss of the 62.09 on the RSI on the weekly, which every single time we are broken, we have seen double-digit corrections if we break downwards and double-digit rallies if we break upwards. That is every time in the history of Bitcoin's price action. Go back and check since inception. Every time that level breaks, we see a massive reaction or price action. So we definitely do not want to break below that region. And this is why the economic news is so important, because economic news has the power to make the price action break up or break down. So we need to pay close attention. Let's jump over to short-term price action. As we said, on the short term, we are not too keen on Bitcoin over here. We are more cautiously waiting for the market. But if we were looking at the short-term price action from a technical perspective, this uptrending level can now be removed. We don't care about it. The symmetrical triangle formation has played out. It is broken down as a reached up target. We are now watching this diagonal trend line, and we are also watching the RSI trend line. We are watching for a break of our RSI, and we are watching for a break of the price action trend line. If both of those things occur, it is likely we are going to see continuations back into 110 into these highs. But I will not be holding your breath for that. Particularly moving into interest rates, I'd be more cautious, and I actually ought to be expecting, if anything is more likely, it is consolidation and chop to occur. So I'm not sitting here trading Bitcoin personally on the higher time frame. I am personally on that 5 minute, that 1 minute chart, scalp trading Bitcoin. If we go down to a 1 minute chart, again, we can see immediately we do have a bearish divergence. This is a 5 minute chart printing already. This is a bearish divergence printing above that prior range high. So what we have here, we would call this a standard deviation setup. Meaning if the price action then closes back below this range high, we'd be watching for some sort of reversion in price action back into these levels of liquidity, looking at 200 moving average, looking at our sell side liquidity, looking at our POC. But if we are able to sustain above here, we are then watching for that momentum to break upwards. And if we do see that momentum break upwards, we'll have confirmation that this is a level of support, and we will see a continuation into that trend line, which we showed you already in the 4 hour. This downtrend line, we'd be confirm your continuation into the trend line. So watch those levels. You have to watch those higher time frame short-term charts for confluence. But all in all, guys, the whole point of today's video is to really drill home the profound significance of this interest rate event. And you know, I'm just really hoping that we walk away from this event, and it's a big ask from the Federal Reserve, with some degree of clarity, right, around what is happening. Now, if we look at historical performance in Bitcoin, Feb is generally a bullish month. Now, I'm not saying this is evidence that Bitcoin is going to be bullish, but history doesn't always repeat, but sometimes it does rhyme. So, you know, maybe we do see a bullish month for Bitcoin. And while we look at the total, while we are sitting above that total market cap high, we are expecting continuations upwards. While we are sitting above that 68K low, we are expecting continuations upwards. It's a matter of when, not if at the moment. That is the more likely scenario. So when is it going to occur? What is going to be the trigger for that move, rather than if it's going to? And when we're in these consolidation ranges, like I said, and this is what I said this entire last year, you know, everyone was telling me, Whale, you're wrong. Whale, you know, you're gonna get wrecked. You're gonna buy back at 12K or whatever the hell it was, or whatever dumb stuff they were telling me. The entire year I was telling you this is bullish consolidation. This is a macro descending channel. Have a 72% probability of continuations toward the upside, and the larger in both depth, okay, and width we see consolidations, the larger the reaction toward the upside or downside when broken. This consolidation right now is by no means a massive consolidation in terms of width, right? We've only been in it for around about 2 and a bit months. But in terms of depth, we're looking at around 20%. So this is quite a large consolidation in depth. That means the reaction toward the upside and downside will be quite explosive when it does occur. So consolidations are like you're blowing up a balloon, you blow it up, resistance builds, and pops, and we see those moves. Or a pressure cooker just eventually pops. That's how I like to think about it. We can't stay in these consolidations forever. We have to make definitive directional moves at some point, and when those definitive directional moves occur, depending on how long the consolidation continues on for, the more reactive those directional breakouts generally are. So thanks for tuning in, guys. Have a fantastic day. We'll catch you guys, I think, on Thursday for our next video, or maybe Friday. We'll see how we go when interest rate data does come out. But we will not be doing a video tomorrow like usual, so we'll catch you guys on the next one, hopefully on Thursday. See you then.